Hi, this is Joe Rabel with Invest Like a Pro. I wanted to spend a few minutes discussing how far a stock can be expected to pull back. Sometimes you just don't. And let's just go right into this example because I think it's really important for you to understand this concept, especially when you're doing stocks like on a swing trading basis or you want to use a tighter stop. So this is a daily chart of Discovery. I'm going to give you an example of a swing trade here that at least a swing trading example. The stock makes a really powerful move to the upside, and we can see the ADX is showing some pretty strong evidence. The green DI, which is the strength of the buyers, makes a really big breakout, and you get confirming evidence on this move before it even pulls back. That's a very strong run for the bulls. And in the process of doing that, the blue line, which is the difference between the green and the red, makes a really strong run and crosses above 25. Again, that happens before you get any kind of a deep pullback. But as this is pulling back, you're starting, and I'm going to show you what's taking place on the lower time frame. So I've got the let me just, again, make it simple for you. I'm going to circle this area so you can see where I'm talking about on this chart. Oh, I've got the wrong one up. So this chart, let me tighten it a little bit. So this is the hourly chart. Here's your daily chart on the left. You've shown strong evidence of a move to the upside. You've pulled back, but you haven't pulled back to the moving average, the 18 MA for me. Some people might use a 20, but in terms anything in that intermediate term moving average, you're going to have a little bit of a gap here. And I think you have to decide, are we going to do one of these type of situations where you drop down and then you make a rally and then you come back down and make a lower low. This will happen quite often after you make a strong move. Sometimes you're going to come all the way back down to the moving average, but you're going to do it in a sort of a zigzag, an ABC down type of a formation. So what I like to look at when I'm doing this, because let me just clear this out. I want to show you something on the lower time frame real quick. So again, we're talking about this pullback here. There's not a lot of strength to the downside when you look at the lower time frame. But that doesn't tell us that we're going to immediately turn around and go straight back up. What it's telling us that the decline is not that strong compared to the move to the upside where you got a big, huge blue ADX reading. And then on the decline portion where red is in control and you get this decline, you get very little movement and not that strong of a move on the ADX basis compared to the green. So my bias is to the upside, but again, that's not necessarily going to help with the timing. Now, you could just look at this and say, you know what, I'm going to take every time a trade shows up where you get an opposing trend trigger where the 18 crosses down below the 40. I go in the zone, but I don't follow through to the downside. I know I don't have any evidence of really strong, powerful move to the downside. And then when I switch this to a MACD underneath, I know I've got really confirming evidence. The bar here, this is where the MACD line is crossing as you're coming back up through. There's nothing wrong with doing that. I like to look at one more piece of evidence when I'm looking at these trades because I'm just going to show you something. I'm going to put in so I don't usually put this in, but I think it can be important in this type of a pattern. When a stock is really strong, sometimes it's only going to pull back to like the 8 MA, the 9 MA, the 10, something like that. People use different ones. Some guys use an 8. Some guys use a 10. I actually use a 9, but either way, it doesn't really matter. You're looking at the fact that instead of pulling all the way back to the 18, you kind of come halfway. You get to the midpoint of the move between the peak and the 18, and that's somewhere around 8, 9, or 10 MA. What tells me that the likelihood, you're never guaranteed, but the likelihood is that you're going to hold this line is ADX. If the ADX is continuing to rise and creep higher, it doesn't have to go strong. It doesn't have to be in a violent straight up line like this. But as long as it continues to climb through the pullback, I'm going to consider any kind of a trigger to the upside as a buying signal. If, in fact, you pull back and the ADX line rolls over, it turns down. It doesn't mean that's negative, but I would be inclined to believe you're going to do more of an ABC type of a pattern and pull all the way back to the 18 MA. So I think it's a very helpful tool when you're trying to decide how aggressive you want to be on this type of a pattern. I mean, I love doing this type of a swing trade where you get a powerful impulse to the upside and now you get your pullback. And then you're kind of stuck in no man's land because you haven't reached the 18 MA. But this has been a very helpful tool for me. If the ADX is rising throughout, I'm going to go down to the lower time frame. I am going to be looking for the trigger coming up back through this area. That is what I would consider to be the buy signal for me, because you've gone into the zone, you came out of the zone. Remember, when the 18 crosses down below the 40, that's supposed to be a negative. But since that's happening counter to the trend on the daily, we consider this an opposing trend to the true trend, which is the one on the daily chart. That's the one we want to buy. We want to buy the pullback after a strong move. We're looking at the daily chart saying, I want to be a buyer. You go down to your lower time frame and you wait for the 18 to cross down below the 40. And you want to make sure that there's no strength in decline using ADX. These are all covered in prior videos. Go back and look at a few of these. I think you get a better understanding. I also spend time in my book, Invest Like a Pro, discussing this in depth as well. And then what you're going to do from here is you want it to come in the zone and then try and break down. And if there's no follow through to the downside, you know there's a pretty good chance that you're going to reverse back up and get back in line with this trend on the daily chart. So I think this is a really good example of how sometimes you just have to be ready and you're not going to get the pullback. Stocks are too strong sometimes. The trend is just too powerful. The breakout is too powerful. You're not going to get a pullback all the way to the MA and all the way to the breakout point. That's textbook material. It doesn't necessarily happen in real life like that. You have to be ready and have other methods to help you determine, again, whether you're going to get an ABC down, whether it's just going to pull back quickly and take off, or whether you're going to get the pullback all the way back to the 18. I like to use ADX for that. It has become an incredibly powerful and helpful tool for me in determining how deep of a pullback to expect. So keep that in mind as you're going through. If you use the 1414 version of ADX, you're going to have to make some adjustments. As I've said in the prior videos, I use a 13 data number for the DI lines, and I use an 8 ADX because I believe I like to see more a quicker type of peaks and valleys. So this rule will only work with a 13.8 version of ADX and DI. I wouldn't use this on a 1414 because pretty much anytime you get a breakout like this, the ADX line on a 1414 is going to be rising almost every time. So you don't know for sure if you're going to get that ABC down using that type of a signal on a 1414 version of ADX. This is meant for the 13.8. If you get a pullback and this is still rising, you want to be a buyer near the 8, 9, or 10, assuming you get a nice trigger on the lower time frame. So I hope this is helpful. I'm going to continue to spend more and more time using 2 time frames. This happened to be a really nice swing trade pattern that I thought would be a really good example. We'll talk to you soon.